Thank you so much. Uh, First of all, I think I do want to congratulate the organizers and our UB family members of an excellent hosting of a very critical event. And as I looked into the agenda and I've been following it since morning, it has been extremely exciting to see the kind of innovation which is happening in every space of financial services. But as I take you through this, the panel and the discussions we'll have in the next 25 to 30 minutes, the fundamental question remains, right? If you do lending, how do you collect? And at Procto, which is a UB company, that is the charter we did not only for India but for globally. And we are the world's first and the pioneer most collect tech company focusing completely on risk and delinquency prevention. So it is a great privilege to go ahead and host Mr. Sudipto Nag, head DSMG and retail policy at ICICI Bank, a close friend and a mentor. And the ICICI Bank overall, most of us, we are aware of it, has been leading the charter of digital transformation, customer service, and disruptive thinking. And a lot of kudos to the leadership team of Mr. Nag, who has been driving that agenda for a fair bit of time. Along with Mr. Sudipto Nag is also Nilesh Gupta, partner with McKinsey and Company, who has a more horizontal view working with several banks across the world and a lot of focus on the risk and collection space. So I think we have a very good panel on that. As I start the conversation, Sudipto and Nilesh, the first question which really intrigues me, right? That as the world has started moving into an era of digital lending, the entire era of digital servicing as well as digital recovery to collection is not talked with the same fervor. So starting with Sudipto, from your vantage point, Sudipto, what are the key trends that you see that the lenders are going through in the risk monitoring, loan servicing, borrower servicing space? And post that, Nilesh, if you want to add comments from your vantage point. Over to you, Sudipto.
So, great question. Largely, if I look at the first getting into on the collection space, I would first like to draw in what has changed in the ecosystem first, right? On the telecom side, when we look at the count of mobile phone penetration is over 120 crores, with some internet almost like 85 crores. These are the big shifts. And the other big piece which I look at, the ease of computation, the storage with the emergence of cloud. Now just think of with the triangulation of all these three, with the power of demography, which is our large part of the customers, which are actually on the mid of the age group. We have seen the digital savviness is the natural flavor in the system. So having that, the entire collection architecture requires a revamp, and which we all are witnessing today. And as a result, what I could see, the one of the biggest shift which is happening today is on the contactless collection, right? Why contactless collection, which is largely a non-intrusive channel where customers are not wanting every time they have to be called. They want to make the payment with a small, nudges and all. And these nudges are not simple nudges. These are quite intelligent nudges, so that we must understand the behavioral part of it. Because in conventional, we have seen it is just like, meeting customers. So now it's not about meeting customers, knowing customer, understanding the behavioral signs. And that's largely happening with all data science, which is actually powering the entire thing. So what I could see is, the conventional model where you used to have a call center and the field agency. Today, contactless collection is emerging as one of the prominent one. Could be about 35-40% the collections are coming through that. But whether this, channels are going to coexist, the answer is yes. There will be a contactless collection, there will be call center, and there will be a field agency. Only thing, the migration will change. And as you know, in collections, the one of the part is not about collecting the money. It's about the loss prevention with the optimum cost, right? And this contactless collection is actually repricing the entire collection framework, to stay competitive and ensure the customer convenience are being addressed to. So this big shift is actually changing the entire paradigm of how the debt servicing used to be before and today. And definitely the customer, data privacy, customer confidentiality are of paramount, because that cannot be compromised. I am sure that change is what, the government is also helping in terms of various alternate data, is sharpening the entire process and giving a complete new outlook how we want to address the customer at
Right.
large.
Oh, thank you so much, Sudipto. And Nilesh, your point of view?
Yeah. I mean, just to build on what Tito mentioned, I think if you look at the three most important stakeholders, the first, the customer, second, the lending institutions, and third, the regulator, I think we are seeing shifts towards contactless and digital collections on all three of those fronts. On the customer side, I think the two big things we've seen is one, the adoption of digital channels across the board, be it in everyday banking, be it on collections, be it even on e-commerce. I think there's been a massive shift on preference for digital channels, which continues even after sort of the mobility and lockdown restrictions have been lifted. And that, I think, will only accelerate and is not going to die down anytime soon. The second thing from the customer side is the preference for personalized engagement. As Rita also mentioned, nudges, but nudges which are not generic nudges made to any customer, but how can we offer that special personalization and tailoring that I think is the other secular theme which we are seeing. From the institution side, lending institution side, I would say one big theme which came out was the vulnerability of the physical model, particularly the field model. I think banks have actually already shifted a fair bit and have lower reliance, but for NBFCs in particular, there was actually and continues to be a big reliance even now on the feet on street model. And at least the 2-3 waves of COVID exposed the vulnerability on that. There was a massive drop on collections efficiency, which was actually not as much driven by the customer's inability to pay, but the inability for the door knock to happen. And that has actually led these institutions to think about contactless collections in a much more active manner than before. So I would say that's the big shift on the institution side. And from the regulator side, as I think Sudipta also mentioned, there is the increasing awareness and desire about ensuring collections is hassle-free from the customer's perspective, and how can we collect in a non-intrusive manner without creating customer inconvenience. I've also seen now institutions talk about customer experience on the collection side, not of course to the same extent as on other sides, but there is at least awareness on that, and the regulator is playing a bit of a role at this point to spur that. So I would say those are the few big themes.
No, that's great, Nilesh, and thanks, Sudipto. This actually sets up the stage real well for the next thing that, again, working in this industry and segment, which has been intriguing our team, is that the role of technology. So if you look into the lending and the origination side, a lot of third parties have created a very, very compelling set of tools to help bank underwrite better, disburse faster, and things like that. But if I look into the collection side, how do you see, Sudipto, the role of technology, especially in the delinquency prevention side, right? You mentioned a couple of vectors in terms of storage, in terms of cloud, in terms of data science and data models. But overall, as an industry leader in that segment, what would be your guidance to the technology companies who are looking into that space?
Well, technology is one of the, I always say data science, digitization, and technology are the three pillars which are actually shaping the entire architecture. So if I just focus on first on the technology, and because technology standalone cannot do much, technology and data science has to come in together. So I will share three or four of the four examples, right, which are very, very pertinent in terms of how we can prevent defaults. So prevention of default is not like, you start working when the customer is missing the payment. The job has to start before the customer has shown symptoms, right? It is very much very close to that of a healthcare system. You have to well immunize to make sure the disease will not be impacting you. So similarly, pre-delinquency management on a portfolio side helps in terms of identifying the customers who have high propensity to miss payment. But how do we do it? So there are machine learning technologies which are being used today. And today, each of the data sets are available in the form of, whether it is an onboarding type of, markers, or could be in the terms of repayment behavior. There are multiple markers in terms of the liability performance and all put together, one can easily understand how the customer is going to behave in terms of the repayment. And during COVID also, we have seen these models are so robust over a period of time, since these are MLT, they've been learning, with each of the day's experience. And today we have seen that, even the COVID markers are being embedded, and still the models are in a position to predict about 80% of the bounces. The beauty is, once you know the bounce who are going to miss the payment, the objective is what type of right channel partner you can have who can help you in terms of giving an omni channel, because every customer will require different type of treatment. It's not like everybody will be require long nudges, when to call, what type of counseling one should give. So those are very, very important part of the entire, delivery. So once the customer is being identified, next is in terms of having the right omni channel. And third is the treatment part. What type of treatment you want to impart to the customer? Should we going to offer a hardship product? Should we give a customer a counseling, or should be just a reminder? So that's one of the PDM model where technology plays very, very important role along with data. And another example I would like to highlight in terms of satellite imaging. It's played very, very important role, largely on the rural side. The satellite imagery is today has evolved so much that one can easily predict basis the weather forecast, could be the soil moisture. There are multiple variables which can help us in terms of predicting how the yield would be, right? And where is the right time to connect to the farmers. And that also helps the entire distribution team to deploy right resource, right time, right intensity, and must put more energy where the opportunity exists. If the farmer is already struggling because of the weather, so there is no point of putting more engagement there. One should put more engagement where the opportunity exists. And the third one I will put it is like a mobility app, because there will be an element of field collection. But a mobility app is, I will put it more like Uberization of collection. When to go, where to go, what would be the shortest route. Like in telecalling, you've seen the talk time and some of the vectors which helps in terms of evaluating the productivity. In case of mobility, the field time, face time helps in terms of doing that. So that's not all. I'm sure there will be more and more will come in terms of voice spectrum analyzer, which can shape the entire calling, the entire telecalling science. What type of customer behavior is basis the spectrum analyzer. So I'm telling you, like wherever we are, I think we are tip of the iceberg. A lot to happen with the emergence of technology, and it is going to help in terms of preventing the default. And everything should go back into the policies in the shaping of the underwriting. That's the entire architecture.
Great. No, thanks, Udito. It jives in so well with what we also hear, right? That there are so many disjointed pieces to this puzzle. And if we are able to put all of this together on similar or common scalable platforms, a lot of these leakages which are happening, which are causing this can absolutely be prevented. Going over to you, Nilesh, for my next thing. So as we research what is happening globally and what are the best practices we can leverage globally and we bring it in, we have not been extremely successful. And of course, India, we are a powerhouse, right? With 1.3 billion people and trillions of opportunities, which we believe at Yubi. And hence, not any solution which works outside the country can be straight fitted here, right? We have a lot of examples where it does not work that way. But as you serve this sector globally in terms of financial services, Nilesh, and of course, the access McKinsey has, any learnings you see from the international market that can fast track some of these changes that Sudipto mentioned?
Yes, absolutely, Sumit. I think it's a great question. And at the onset, let me say that it is in many areas, India, as you yourself mentioned, is actually fairly ahead of other mature markets on many fronts, and UPI is a great example of that. So fully agree with your notion that we should not, in that sense, only look to figure out learnings from outside of India, but even in India, in various pockets, there will be lots of learning, right? Also, there is a big spectrum, and there are some countries like North America where there is relatively higher advances from a collections practices perspective. But there are many other regions where I would say India is actually fairly ahead even now on our maturity. But with that caveat, I think the 3 or 4 themes which stand out for us on best practices. The first is just this overall mindset and culture of customer assistance rather than the traditional approach of collections and hard recovery. How can we as an institution give the customer multiple debt resolution techniques as opposed to the more traditional approach to collection. And that's something which in some of the developed markets, given the regulatory pressure, given the more litigative environment of those geographies, these institutions have to be more cognizant of some of those pressures. So I would say that's one theme, the overall mindset of customer assistance, and therefore how do you embed that in your overall culture, in the strategy you employ for collections. The second theme is the notion of multi-channel and omni-channel collections. In some of the mature markets, the usage of online banking, digital banking, mobile, WhatsApp is actually a shade higher than in India at this point. Sudipto mentioned the number of 35-40% for contactless collections. That number for some of the mature markets is closer to 65%, of course, given the overall savviness of the customer. And I think what is required, apart from just the prevalence of the channel, is the right technology architecture and the right strategy on what channel to employ for what customers at what stage of the life cycle in the collections process, and how do we ensure a seamless experience across the various channels. And that's something which will require thinking about technology architecture in a more holistic manner. The third theme is around the advanced analytics and data sciences. Again, that's something which Luther mentioned. There are institutions now which have sort of a range of 20 to 30 advanced analytics, MIML based models powering the various stack across collections, be it on pre-delinquency management, be it on the right channel to allocate a customer, be it on the right time to push for a settlement decision versus the repo decision, be it the time of the day and the frequency for contacting given the nature of the customer and so on, right? I think there is a whole library of models which some of the leading institutions are deploying for aiding the collections efforts, which is the third source of best practice in our opinion. And I think the final theme is around the notion that collections is not only the job of the retail collections team, and technology, analytics, collections strategy all need to come together in a cohesive manner to actually deliver all of this to the customer. And in some institutions, tends to be a somewhat more siloed approach, which actually prevents the best practices across these units to come to the customer. And the better institutions actually take a very collaborative, cross-functional approach to collections than operating in a siloed manner. So I would say those are the four big themes from our perspective.
So Nilesh, as an extension to that, do you also see that in the financial institutions and the lending part of the industry, the internal processes are also maturing to adjust to borrower preferences?
I think it's a journey, it's a spectrum, and I would say that for a set of institutions and for a set of customer segments, there is actually already a fair amount of maturity on how to have differentiated strategies by customer segment. There are at this point a set of institutions in the country which adopt a more one-size-fits-all approach, but increasingly people are going towards the more tailored approach. And I would say that there are a set of institutions already quite well ahead of the pack, and it is a theme which will really accelerate. What comes in and what is also important is the relevance of players who actually bring this insight already, because not every institution has the scale to actually build all of this in-house, to think through the entire suite of analytical models, think through the right digital journeys, and therefore the acceleration of specialized players will also help drive the shift towards more mature internal processes, at least in my opinion.
Great. No, thank you, Nilesh. Very, very insightful. And actually, what you said in the later part kind of segues me into my next a thing that really intrigues me the entire time, right? And it is very clear to pretty much everybody every time we are in a conversation with an external party, right? That conversation, if it is an interview, may or may not culminate, but I always get a lead, because the experience of current collections and customer touch point is so difficult for the end user, right? They end up saying, hey, what you guys are doing, why can't you tell it to the institution who's trying to reach out to me? So Sudipto, it is said, right, that the best way for any lending institution to lose a customer, where we look into LTVs and everything at the time of underwriting, is to actually take them through the collections process. Now, from your vantage point, right, and I really salute your bank that actually there is no collections department in ICICI Bank. It is actually debt servicing, and the name itself represents how the bank looks into their existing borrowers, even if they are in a delinquency stage. So, what would be your guidance to the lending community, Sudipto, about how to
Yeah.
balance experience? And I know we talked about experience in great detail against delinquency because that's a business metric.
So I will put it like, this question, I would like to answer it with a point of a culture first, right? Because the culture is more, it spreads much faster. So and as an organization, we have rechristened the entire debt service collection as a debt service unit. And that's not all. We call our managers as a relationship manager, and that's how the entire organization industry is going to shape over a period of time. Because the very reason of any of the institution is the customer, right? And end of the day, we are into service industry. We are there to cater the customer, right? And customer might miss the payment for multiple reasons. Not necessarily always it is intentional. There are times customer miss because of just missing because they missed it. Like it could be a slip between the cup and the lip, right? It do happen. Sometimes it is circumstantial, short term. So given all the situation, it is very, very important to understand the customer. But when you tag yourself like a relationship or service, the natural flair or it will come in that I am here to serve the customer, right? So when it comes down to services, servicing the customer, the larger part of the customer, when you do a right underwriting, right onboarding, definitely you will have the right mix of customer who will require a smaller, shorter engagement. And that's how it is working well for us. But also touching on the point what Nilesh was mentioning, when it comes into the collection practices and in terms of people generally look at very, very negatively when it comes to collection as a stopper. But I feel it's not a stopper because the UI UX, which generally we feel in the origination of the customer, is very much needed by the customers who are missing payment, because largely 90 plus customers in 100 generally make the payment, right? So larger part of the customers are good customers. So why you just think that the UI UX is not needed for them? They are as much as important as that, and that's the reason we are seeing all the partners are today working on the space where UI UX is playing very, very important role. And while talking about that, I feel that DIY, which we call it do it yourself, right? There could be a different nomenclature by different institutions, is actually making the entire thing shift to a different level. Use of bureau simulators, right, where customer can see their hyper personalized score and can actually it can work on the behavior part of the customer. Why I'm missing the payment, why I can make the payment, and what could be the consequence of not paying on time. So when it comes into the behavior, there's a natural flair of making payment if there is ability, right? You don't have to follow up and push beyond a level. So objective is educate, negotiate, rather than increase intensity and then negotiate. So that's the approach larger institutions are taking, and I'm sure that will be the way of life.
No, that's so heartwarming, Sudeep, to hear, right? The approach, at least leading banks like yours are already taking, because those 90% people with the right collections experience are actually a good cross-selling opportunity, right, as well. And at times we
Absolutely.
forget. So a lot of fintechs and NBFCs who in the current business cycle may have a challenge in around risk, delinquency and collections. I think this is a very, very relevant point Sudipto is making, that there are other ways rather than taking it the very hard way and making sure your relationship with a customer where we spend a lot of money to actually onboard them is completely jeopardized forever. So no, thank you so much, Sudipto. Also, Sudipto, as I take another angle to the same thing, right? Nilesh mentioned that I think what the Indian regulatory system has done with UPI and digital payment will go in history books. The speed, the clarity of vision, as well as our societal adoption cannot be undermined. So my 80-year-old mother feels free to do a UPI transaction where she did not know what a smartphone was 5 years ago, right? That's how we as society are so open. So if we look into the entire evolution of the digital payment ecosystem, and as you know, Spokto, we are looking into expanding into several more countries. And this is becoming a critical decision point for us also. But for the Indian market, Sudipto, how do you look into evolution of the digital payment ecosystem against delinquency prevention? Are there things that the digital payment ecosystem should be doing to create a better experience? What's your vantage point view on that, Sudipto?
Well, good question. And payment in the debt servicing without payment, it is not, complete. So definitely payment is the last part. So here, if you look at, government, again, I will say has played a very, very important role. So it's November 2016. We all remember demonetization. It is a very, very important chapter. And just think that demonetization as well as UPI, it comes very hand in hand, right? When there is no choice, people move to UPI, right? And when we look at the COVID, which is the next big event, though nobody wants to have COVID, but COVID has preponed lot of adoption, which would have happened over 10 years, which has happened in 2 years. And large part of the institutions today, you will find larger part of collections are happening digitally. Again, the age group also played very, very important role. When you see about 4 to 5 hours is the basically, mobile time and all. So that these are all factors which are helping. And it is very heartening to see that, when about 2021 data shows 40% of the global digital transaction is done by India itself is a big marker. Look at about 595 crores of transaction happening through UPI last month. So these are the markers which clearly show the landscape is already drawn. The train is already there. It is about us who is going to board the train. And nobody wants to miss the train because the journey is like defined, right? We want to be the best in the world in terms of digital payment. And when I look at collections, it is largely large bank generally they differentiate customer between one infant type of digital, one is that migrant type of digital, and the third is the native digital. You give an example of your mother. She could be, though she's an infant digital, how one can, handhold what type of campaign one should do so that we can again onboard the customer in such a way it will be seamless. What would be the extent of digital payment one should have looking at the age bracket also? There could be a migrant who are in between, they're doing digital but not doing digital completely. What type of campaign should be done? And those who are native, you need to just, make sure that they should not move out of that. So a lot of data science is also here playing very, very important role in giving the guidance. And if I look at in the overall landscape of debt servicing, the digital payment has helped in terms of reduction of the cost, elements of fraud, and all the settlements are real time. That gives a lot of trust. We are into the business of finance. Trust is the one which is there between the institution and the customer. And this digital payment is further, endorsing the all the norms that yes, like all the facilities are available, and it is just the intent. One will have to make it. Rest all, it is seamless.
Yeah. No, thanks, Sudipto. It's as you rightly said, right, 18, 24 months ago, where we are today would have seemed almost undreamable, right? But you are right, it is already here. You see people, and it is so strange, right, that people are okay forgetting their wallets at home. But if they forget their mobile phone, it's a major hassle, because actually the mobile phone can do the wallet work also in the world of today. Nilesh, coming to you, because if you look into the third angle, we talked about borrowers, we talk about institutions, but a lot of things around the regulatory system, right? As we talk about digital, as we talk about creating those unique journey of one, there's a lot of risk of customer data privacy also, right? And as you look into it from your vantage point, not only in India, but outside India also, consumer protection rights, GDPR, Sri Krishna Committee report, which is tabled in the parliament, and others. How do you see that this will impact the risk collections and loan servicing part of a lending institution, Nilesh?
Yeah, no, great question, Sonal. I think three sort of sets of implications. The first is the availability of data will become a bit harder. I think even all of us are privy to the fact that 2 to 3 years ago, there were entire business models built on the fact that you will scrape the SMSs of a given individual and create a lending model on top of that. That has completely come to a halt ever since Google decided to do away with that tracking, right? So I would say that we will see increasingly the data which people had assumed was available without consent in abundance will actually become that much harder. And therefore, we will need to tailor our approaches, our models to that reality, as opposed to continuing to assume that all sorts of data will be freely available. The second point actually linked to that is the notion of consent. I think consent will become a lot more important, and good customers, to Suzupo's point, will be more than happy to make the data available, but there will need to be that consent architecture which will need to be worked upon, not only for debt recovery, but across the broader financial services stack to actually seek access to that data. So I would say that is one theme. I think the second theme, in addition and going a bit beyond data privacy, is the notion of fairness and equitable treatment from the regulator. At least I believe that even from an Indian perspective, that is going to intensify going forward, and institutions will need to take cognizance, therefore, of that. Even in India, I think last year a large NBFC was fined 2.5 crores by the regulator for not ensuring due process of the debt service agents which they were employing. And of course, outside India, in the US, there are all sorts of acts around fair collections practices to be followed. I believe that in India also, over a period of time, such acts and guidelines will intensify, and therefore lenders will need to be quite cognizant and thoughtful about how they reach out to customers, at what frequency, at what channel, be it on digital media or be it via agents. And that's, I would say, theme number 2. Theme number 3 is around processes which will need to evolve. At this point, at least for some of the NBFCs, some of the smaller banks, there is a fair amount of manual work and a slightly higher order of information which is shared with the collection agencies, with the agents. And I think that we will see those processes becoming more automated, and institutions becoming more measured on what information they will share with their third-party partners for the purpose of debt collection. So I would say those are the 2 or 3 themes in my mind which will actually increasingly play out in this space.
No, thanks a lot, Nilesh. And overall, I think if I look into it, and I'll close the session again by thanking Sudipto for your really valuable time and Nilesh for your insights. But I think what I clearly heard was that the borrower has already changed. So unless and until platform players, institutions and regulators do not adjust to the change in the borrower behavior, some other thing may happen which we do not know about, right? And all of us, I think we are marching in the right direction. So with that, thank you so much, Nilesh, for your time. Sudipto, for your time, as well as everybody who participated in this, in the online Capital Circuit event. Great work by the organizing team. And with that, I will go ahead and close this fireside chat for the event today. Thank you so much.
Thank you so much. Thank you, sir, for having us.